So natural gas, the big news is this gap down over the weekend. We ended Friday at $3 and we opened up at about $2.77. We're now down at $2.69. And the question is this a pullback? What's the reason for it? Is it technical? Is it going to continue lower? Well, I don't know, but I can look at a couple of things that may have caused this. First of all, remember we said that $3 might be a resistance level, shaven head candle, big bullish candle, actually a tower candle, and $3 being a round number and getting pretty close to an area where people will be considering getting out of long positions which were taken higher up to try and minimize loss or get out somewhere near break even. And I think we've seen some profit taking, or at least some minimization of loss taking place at $3. We've got this area above us, $3.30 odd to $3.70 something, which is where still a lot of long positions will be held. The other reason for this is because we've just needed a technical correction. I think on the charts, we've had this big rally up from below $2 to $3. That's a big move in just 7 or 8 days. Plus, we've got these candles, all of these candles in a row. That's 1, 2, 3, 4, 5, 6, 7, 8 candles, basically bullish, apart from Thursday, which was slightly bearish. But when you get to between 7 and 9 bullish moves, bullish days in a row, you can expect a pullback, and that's just generally a rule of thumb, and it applies to any instrument that you might be trading. When you get to 7 days, and then 8, and then 9, you've got to consider that there might be a pullback. So perhaps a technical pullback, perhaps some profit taking or minimization of loss. And then the other big news was this regulation proposal, I suppose, for minimization of rail transport of LNG in the US. Let's have a look at that quickly. So there are a lot of articles on this and a lot of talk back and forth, really. But if you have a look at some of these articles, here's Energy Wire. And I'm not going to go through all of this because there just isn't time here. But so the people against rail transport of LNG are against it for 2 reasons, I think. First of all, because it creates a safety hazard. There has been a recent accident in a place called East Palestine in the US. Nothing major, nothing serious, I don't think. But there have been accidents and so on. And there's an argument that this could create catastrophic consequences if these are large trains with supercooled liquid natural gas in them, and a derailment of any sort could, or an accident, could create death and destruction and pollution. There's also the other argument that liquid natural gas is bad for the environment and it should not be encouraged. I think this is a kind of a small bit of news, though. These are just proposals, arguments being put forward, as far as I can tell. Put your comments in the comments section below if you have any more news on this. But it seems to be that it's just these ideas and proposals that are being argued back and forth. Is it a good idea to transport by rail or not? I think, as far as I can tell as well, this is a relatively small amount of liquid natural gas that is transported throughout the US. Most of it goes via pipeline. So I think it might be a little bit of a storm in a teacup. I don't know. Let me know in the comments. What do you think? But overall, I think we've got a combination of some scariness from that news. We've got a combination of a technical pullback from 8 marching soldiers, I suppose you could call them, 9 actually, and now we're pulling back down towards support. And also profit taking or minimization of loss at the key $3 level, even considering that there might be a lot of orders slightly higher up that are waiting to get out of these long trades. They were taken premature to the low being formed. Now, where do we go from here? Well, we've got a big support level, which I pointed out. I was able to take some profit on Friday, but I was not able to hedge my remaining positions with a short position because we gapped lower. What that's left is this tower candle, really. Massive gap down from $3 to $2.77. And this isolated tower. This is not a good sign. It's not a good signal for long positions. However, having said that, we do have this support at $2.66, which I think is going to be pretty key, pretty crucial. We've got the 20-day moving average just underneath that as well, which is now beginning to start to curl up. So that's going to provide some support along with this red line, which is the key first support level, which is a pretty good support. It's a good plateau top. It's pretty solid. It's very structural. It's very nice. It looks good. However, having said that, below there at $2.34.35 is another pretty significant area of support. And we may actually have to get down there. And you can imagine if we do get down there, we might get a sort of a head and shoulders pattern. So it's very, very possible, don't rule this out at all, that we get down to $2.35, and I'll try and draw this on the chart for you. So something like this, moving down there, bounce back and forth, up, down, like that, to form a kind of a head and shoulders pattern, and then a move back up from there, potentially back up to where we are and maybe even higher. So that's the potential pattern that we might have, or this whole thing might just not get that low. We might just have it at this sort of level, something like that. That's the other possibility. So we've got that possibility and we've got that possibility. And if support doesn't even hold at $2.35, then we've even got that sort of possibility going forward. So we know where the levels are. We just have to be very careful to structure our trades and to not get too bullish about natural gas right now. I still think, though, however, we should get up into this zone over here between $3.30, $3.70, 75. That should be the eventual target. How long it's going to take to get there, whether we've got to go all the way back down to $2 or $2.34 or just down to $2.60-ish before moving up. I think at first glance, this is probably more likely what we'll get, considering the news was a bit of a storm in the teacup, considering that there will be more positions up here holding onto those longs because that's where they got in and they don't want to take those losses, and that the price will naturally want to move up into this area. So bear that in mind. 3 possible scenarios: that one, or that one. And we need to structure our trades accordingly. I'm not going to tell you how to trade this, but I know what I'm going to do. I'm possibly going to be seeing what reaction we get over here. Remember, I'm still holding on to unhedged long positions, not all of them, but still some of them. May look to consider adding some more long positions down there, but I'd prefer to do it down here at $2.36. That's my plan going forward. Let's see what happens. Let's see what comes out of this news and how determined the people and the funds and retail traders that bought at this area here are willing to hold on to those positions. It'll be interesting to watch. If you enjoyed this content, like always, please subscribe to the channel, like the video, etc., etc. It really helps me get this news out. Thanks so much.